Welcome back everyone to my Rivian deep dive. This is part 10. Last time, part 9, we finished off with discussing the optimism built into the gross profit projection. But before we dive deeper into gross profit, I want to discuss real quick here the average selling price assumptions that are underlying this whole forecast. Several times I already mentioned that I expect a continuous strengthening in average selling prices. In the R1 and van platform. For example, the average selling price was $86,000 in the fourth quarter of 2024. This was driven, as Rivian commented on, by a very strong product mix. Rivian had a significant uptake of the tri-motor version, which is a premium variant of the R1 platform, obviously. Rivian commented also on some mix effects with respect to commercial vehicle sales, so the van platform. They also dropped some comments on the expectation for 2025. All these comments have been reflected in modeling of the ASP mix with, as I said before, a slight optimism bias, and this then sees a sort of a consecutive tick up in average selling prices. Again, the drop in 1Q is driven by seasonal factors and of the one-off effects of the success of the tri-motor version, which based on Rivian's full year volume guidance is likely not sustainable. So the forecast reflects some normalization of that outlier ASP. So then when we look at the pricing, and keep in mind the scale here is made shorter to see changes more clearly. So the average selling price of the R2 is, my expectation is it starts at around $49,000. And my fundamental assumption in terms of modeling the ASP is based on a trim composition assumption, and put down here high level what that means. I believe that Rivian will be selling the R2 in basically 3 different trim levels. There's like an entry level version which has only one motor, it's rear wheel drive. Then you have a long range version which has all wheel drive, and then there will be likely a performance version. So basically very similar to Tesla. Of course, Rivian can call it that, they will apply different names to give these vehicles their own brand touch. And then so what I did is I looked at Tesla's vehicle composition in terms of these trims and also pricing. And what I assumed is that Rivian would be selling at once a steady state is achieved, a similar would sell a similar distribution of trims, which probably makes sense. But in terms of pricing, I looked at Tesla's pricing and I applied a premium to all these different trims pricings in Tesla's case and applied them to Rivian, because I assume Rivian probably tried to come in, position itself as a slight premium to Tesla. And, but certainly at least in the beginning, because in the beginning when people launch new vehicles, they always can skim the excess demand, and this also makes sense to compensate for the higher costs initially, and that's why Rivian is most likely obviously not launching with the low-end trim, but most likely with the mid-level trim, the long-range all-wheel drive, and just like Tesla after 1 or 2 quarters launches then the performance version. So the first few quarters will most likely, as we saw in Tesla, benefit from a significant outlier trim mix to the positive, and then over time, as sales sort of reach a steady state, lower trim vehicles contribute a higher share, which then drives some erosion of the average selling price. However, the forecast, and this also applies to the R1 and van platform, over the longer periods also reflect some inflation adjustments, because if one thing is true in the automotive industry, vehicles never really get cheaper over long periods on a real basis, because they are, just like everything else, is affected by inflation, and that's why, especially when you make long assumptions, you should always have some kind of inflation assumption. Although in the last few years this was not true, but this was driven by inflated prior prices, driven by COVID, that preceded actually the inflation spike. But this is a different topic. So with that now out of the way, let's jump to gross profit, finally. So here you have the gross profit development. So this reflects everything, all the segments, so the total basis. And let's just have a quick look at how gross profit developed. So in 2024, Rivian's gross profit was a negative 1.2 billion. The forecast results in positive 55 million. So what you see on this list is not forecast. It's just the summation of all the other stuff we already discussed. So this falls out of the projection, just to be very clear. So if you feel that what was presented thus far is sensible, this is the mathematical result of all of that. So 2025, modest gross profitability for the full year. And as I said earlier, this is exactly in line with what management guided us for. Then 2026, there will be a substantial improvement to over 700 million, and then kind of explosive growth in gross profit to 2.4 billion in 2027. And again, this is driven by a highly optimistic R2 gross profit assumption, plus the effects of the back-end loaded VW JV, plus increase in credit sales. In other words, this is a culmination of this optimistic forecast. So keep that in mind for the next part. So the next part is this. This is operating profit. So to get to operating profit from the just mentioned gross profit, all you need to do is you have to deduct operating expenses. And operating expenses in Rivian's case comprise research and development, selling, general, and administrative expenses. And unlike gross profit, and I just jump back here real quick, which will be positive basically from mid 2025 and then growing, there is still significant operating losses basically far into the future, despite positive gross profit. I repeat, despite significant improvements in gross profitability, there will still be significant operating losses. And before we dive into the drivers, let's just recap how material these losses are. So in 2024, Rivian lost almost 4.7 billion in terms of operating losses. So operating losses, everything you see here, but before non-operating items. But this is really 95% of the business. So this is operating is basically the business. Let's just simplify it a little bit. So the business lost 4.7 billion. The forecast implies another 3.3 billion loss in 2025. That loss shrinks a bit in 2026, but it's still over 3 billion at 3.1 billion and continues to make significant progress into 2027, but still comes in just under 2 billion in losses. But again, assuming this very high gross profit margin can be achieved. And when you look at this operating profit, this is something Rivian never talks about. They always talk about gross profit, and they basically, they're not touching this topic with a 10-foot pole. They're always what they're doing, they point investors to gross profit because it sounds cool. Profit, right? Positive gross profit, but completely avoid this topic. And then they always point people to adjusted EBITDA. That's basically, this is how they always frame it, which is a clever way of doing it. And if I was in Rivian shoes, I would do the same, frankly. But I will discuss later the problem with that, because ultimately you need to look at operating profit. It's a key metric, and when you look at this metric, you can see how it's still far from profits, even in 2027, even under these highly optimistic assumptions, frankly. And when you look at this trend, even when things go really, really well, even operating profitability in 2028 looks like far-fetched. I did not, full disclosure, not try to project into 2028 because I think this gets kind of wacky. But the trend we're seeing on these numbers, and we touch on this later, which is actually in line with Rivian's long-term kind of guidance, it doesn't look good. So right now, I don't know, it's hard for me to imagine gross profits. I mean, you can see here the significant quarterly trend in 2027. So if you kind of just graphically extrapolate this in your mind, you could see how the 2028 could get to break even. Break even means making no profit, making no loss. But again, this is 4 years out and includes credits, etc. again, I'm just trying to provide transparency here. So this is all quite aggressive. Because the bigger picture is, if this forecast is remotely accurate, there's basically no upside in Rivian for at least 18 months. Because in 18 months, we get to 2026, but from 2026 midpoint perspective, you're still looking at well over a year just losses. Okay, with that, I wrap up part 10 of this series. In the next part, we discuss these important operating expense drivers that create this huge discrepancy between gross profit and operating profit.